All right, now we want to move on to the time frame within the platform itself. Let's see where the time frame is in MetaTrader and how we can work with it. Guys, as we mentioned in the previous session, we customized our MetaTrader, we personalized it, and we created a template. So what exactly does that mean in practice? It means, for instance, whenever I decide I want to add a specific new trading symbol to my MetaTrader platform, let's say, for example, what should we take a look at right now? Let's go ahead and choose Brent oil for this demonstration. Now here, as we said in Market Watch, right now you see Euro, Gold, and here is Brent oil. I can open this so you can see it completely. Now for Brent oil, I said select the chart window option. We don't need Market Watch anymore. I right-click, select the template named Farjam, which I made with a white background, so the background is also white. I also made a dark mode template, which we named Farjam 2. We go to the end, and this is now the price of Brent oil. So this way, we managed to bring up 4 charts. Now, moving on to the time frame, since we were talking about Brent oil, we have 3 types of global gold. They say, well, the gold that we know as gold is called gold. XAU. That's the same XAUUSD. We have a digital gold, which is Bitcoin, and we have a black gold. In our 4 charts, which include oil, these are the 3 types of gold that we often talk about in the market. So which gold are we referring to? Is it black gold, meaning oil, or digital gold, meaning Bitcoin, or just gold itself? Of course, everyone knows that the global gold ounce is what we see together here. For example, here we are looking at the EUR-USD chart, the Forex chart for the EUR-USD pair, and this window is the music window where you can see our time frames. Right here, I'll take it and carefully place it in this corner, this specific window, look guys, ranging from the 1 minute, 5 minutes, and up to the 15-minute charts. We have the 30-minute, the 1 hour, the 4 hour, the daily, the weekly, and even the monthly. Those are all the different time frames it has. Okay, now let me tell you something really interesting, guys. This actually goes all the way up to the monthly time frame, which is quite impressive. With what we've learned so far, it starts from 1 minute. That is, it starts with 1-minute candles being formed, then 5-minute candles, 15-minute candles, 30-minute, 1 hour, H4, daily, weekly, and monthly. So now, let's move on to the first and smallest time frame, the 1-minute time frame. Generally, those who trade on lower time frames are doing scalping, meaning they work short term. Scalpers analyze their trades using the 1 minute and 5 minute time frames. If we go a bit higher, we have M15, M30, H1, H4, up to daily, and we can refer to those who work midterm as using these time frames. And when we move on from daily to weekly and monthly, those are usually people who want to trade very long term, which are much fewer in number. In the market, if someone wants to use the monthly time frame, for example, to leave their trade open or even weekly, but daily, H4 and H1. These are really good time frames for analysis and understanding trends, and in the time frames that scalpers use, that is, daily traders. Meaning within a single day, they determine the fate of their trade, or sometimes within just a few minutes, or at most, they make several trades in one day, exit the market, and the next day, they enter again without any new trades left open. They don't carry trades over from one day to the next. Now, let's move on to the topic of time frames. Let's quickly review what? The topic of candlesticks. We said that a candlestick is made up of 4 factors. So what exactly were these 4 key factors? As we previously discussed, a single candlestick, depending on whether it is bullish or bearish, provides us with 4 distinct pieces of information. Both of them have their lowest point. We called them low, meaning the lowest point. What was the highest point for both of them? High. But where was their difference? Bullish and bearish? A bullish candlestick means it opened at the bottom and closed at the top. A bearish candlestick means it opened at the top and closed at the bottom. This was the difference between a bullish and a bearish candlestick. Now that we've done a review and gone over candlesticks again, the 4 actions and the 4 parameters they give us, like low, high, open, and close. We've reminded ourselves of them once more. Now let's see what effect they have on the time frame. So when we're in the 1 minute time frame or the 1 minute market, that is the changes we see from this low to this high, and from the moment it opens to when it closes. meaning however much it goes lower or higher from open to close, where it opens, where it closes. The entire time it takes for this candlestick to form is just 1 minute. Right? When we're in the 1 minute time frame, each of these candlesticks that we see here, it hasn't taken more than 1 minute for each of them to form. Now look, when we move to the 5 minute time frame with the same definition we've just learned, so for each of these candlesticks to be formed, it has taken 5 minutes, right? That means the overall market movement from its open to its close happens within 5 minutes. For example, look, I go to the time frame. In the same 1 minute time frame, I go back 5 candlesticks. 1, 2, 3, 4, 5. Okay, I take these 5 candlesticks, the overall movement from when this one opened until the 5th one closed. When I switch to the 5 minute time frame, this candlestick represents the overall movement of those 5 1-minute candlesticks. Remember, I explained in the candlestick combination section how to combine candlesticks together like this. Let's review it together one more time. We said that in the candlestick combination section, we do the following. No matter how many candlesticks we want to combine, 2, 3, 4 or more, we said if it's more than 2, you take the open of the first one and the close of the last one. For each of these candlesticks, whether it's 2 or more, the lowest point they reach is the low of the combined candlestick. The highest point they reach is the high of the combined candlestick. For example, if we take 1, 2, 3, 4, 5, if we select these 5 candlesticks, the open of the first one is here, the close of the last one is here, right? So what do we always have between the open and the close? The body, which is the candlestick's body. The lowest point they reach, let me change the pen color, for example. Let's say we want to draw the shadows in green. The lowest point they reach. Our low is the lowest point they reach. What about our high, kids? This candlestick, which one of our candlesticks does it look like? This candlestick looks like a shooting star. Right here, we want to take this particular section and put it over here. Notice how it has become a candlestick just like this, right? Now look closely at its low point at the bottom and its high point at the top. As you can see, it forms the shape perfectly. Open and close. We combined these 5 and the last candlestick. Here, we figured it out together. So if we go to the 5-minute chart now, our last candlestick should look like this. The market itself, the time frame itself, combines the candlesticks. What does that mean? It means it takes every 5 1-minute candles. The open of the first, the close of the last, and the lowest point is the low. It considers the highest points, whatever their shape, and creates a 5-minute candlestick out of them. How about 15 minutes? It takes 3 5-minute candles, puts them together, and does the same thing with them. For the half hour, it takes 2 15-minute candles. For the 1 hour, it takes 2 30-minute candles. For the 4 hour, it takes 4 1-hour candles. When it gets to the daily, it takes 6 4-hour candles in a 24-hour market. For the weekly, it takes 5 daily candles. Remember guys, Saturday and Sunday, the market is closed. And for the monthly, it takes 4 weekly candles and does the same thing. So from the 1-minute candles, we go all the way up to the monthly. Now we need to move on. Let's look at it now on the 5-minute chart. Remember, there's a shooting shape, guys. Let's check it out on the 5-minute chart. Our last candle, the minute 1, is that same shooting shape where its open is lower and its close is higher, meaning it has a white body. We saw exactly this from those last 5 1-minute candles, how it was formed. And likewise, if we now combine these sets together, the open of the first, the close of the last. A candle like this, with a higher high here, a lower low here, this kind of candle. Now, if we look at the 15-minute chart, here it is. These 2 15-minute candles have formed this 30-minute candle, and these 2 are the 30-minute ones. This has formed the 1-hour candle. 1, 2, 3, 4. Guys, let's build it together in a single 4-hour candle. We say the open of the first, the close of the last, and the rest should become the shadow. Do you see? 1 4-hour candle. Now 6 4-hour candles make 1 daily candle. 4 or 5 daily candles. 1, 2, 3, 4, 5 make 1 weekly candle. Guys, the weekly candle closed as a doji. Remember, we talked about doji candles. We said that when the open and close of a candle are at the same point, it basically has no body. This candle indicates that the forces of supply and demand have become equal, with the open and close coming together at one point, which is called a doji. We discussed the doji candle thoroughly in its dedicated file. And in the monthly time frame, 4 weekly candles are combined together to form one monthly candle. This covers the topic of time frames in MetaTrader. So from now on, whenever we talk, for example, if we say let's go to the H1 time frame, we know exactly what we're talking about. What does that mean? It means that we select the H1 option in the time frame, and we know that each of these candles has taken 1 hour from the time it opened to the time it closed. In music composition, it's from 4 to 15 minutes, 2 to 30 minutes, and the sequence continues like this up to 61 minutes. So now, in any time frame we go to, we have an understanding, we know which time frame we're in. H1. When we look at this H1 candle for XAUUSD, from low to high, we say it's within the last 1 hour. The XAUUSD chart has moved this much within these prices. The price movements within a 1 hour interval have been for XAUUSD, and here is the last 1 hour period after which the market closed. I mentioned this from the close up to this time frame so we can see it in MetaTrader itself. Now in the previous file, we talked about it, showed it, and did the combination. We also said it once so our eyes get used to it. Well, what we see on the chart is where we made our decision in the market. We want to see our candles in 2 types of reversal candles, meaning we either see them as hammer candles or as shooting stars. But in practice, the market doesn't always form hammers or shooting stars. For us, what we learned as a standard, we approached it classically. We either worked with candle combinations to bring in all the candlestick patterns. What should we do? Combine them, whether they're hammers or shooting stars. We said these 2 are our reversal candles, meaning at the end of a downtrend, seeing a hammer can turn the trend. Bullish, and after an uptrend, at its end, seeing a shooting star can turn that trend bearish. For example, on the chart, I didn't give an example like, guys, take a close look right here. Do you see how the market suddenly dropped down like this, right? Just look at this sharp decline right here. It is quite significant. The market dropped in this way. What happened at the end of the market? At first glance, we see these 2 candles next to each other. So these 2, 1 candle dropped, then it bounced back a bit, okay? But according to the rule we learned, when you have a bearish candle, like this, right? And then we see a strong bullish candlestick immediately after that. I'll draw it out so you can see it clearly. It's exactly what happened. Now, some people said it's an engulfing pattern, others said it's not. Does it even matter? We said after a downtrend, what are we looking for? Either a hammer or a shooting star, right? 100% it's a hammer. Let's take a closer look at the hammer. We said the supply that disappeared caused a long wick. What was a hammer? A hammer means that handle, that long wick. The supply that was there got taken out by the buyers, and the demand eliminated the supply. Right now, the buyers are strong. How did we combine this? We would say that the first candle is a bearish candle. Its open is high, its close is low. We take the open of the first one. The second candle is bullish. We want the close of the second one. Its open is low, its close is high. So the close here is the open of the first one at the bottom and the close of the second one. This becomes the body of our combined candle, which we are combining together. The lowest point the market has seen becomes the entire lower shadow, and the highest point the market has seen becomes the upper shadow. Okay, guys, this candle is the combination of those 2 candles that I just drew above. And what the hammer forms for us after a downtrend, what does its outcome indicate? It tells the market, I've said this many times, the chart literally talks to us, we just need to know its language. Let's see what it's saying. Here it's saying that after a downtrend, I have a hammer. We were able to get a good profit from the market with a buy that we can take here.